this morning, Tuesday, the 16th of July. I am Bosin Omofaye, and we welcome you, our viewers here in Nigeria and around the world. We've got quite a lot packed into the next 1 hour of our programming, so let's get the show started. Nigeria's House Speaker, Gbajabiamila Amila, says the new National Assembly is ready to give a special budgetary attention to the 3 senatorial districts in Zamfara State to address insecurity. The House Speaker says the warring factions of herdsmen in Zamfara State, however, must agree to a 1-year ceasefire, adding that the new National Assembly will use budgetary allocation to bring development to Zamfara State. Meantime, the senior policy advisor to the Vice President on Agriculture Intervention Coordination, Dr. Andrew Kwasade, has been quoted as saying that meetings has been held with leaders of the Miyetti Allah Cattle Breeders Association and farmers to avert food crisis in Nigeria. According to Kwasari, he was quoted as saying, in 2019, the prices of almost all food commodities have gone down. We have seen a lot of stability in food prices, end of quote. He went on to say, quote, the aspiration of the farmers is to see how they can have peace and return to their farms and grow more food. We'll talk about Nigeria's June inflation and why the social media has been awash over the last 24 hours, whether they believe the inflation prices or not. Meantime, the new Oyo State Governor, Oluseyi Makinde, has declared his personal assets of cash at hand and in bank, landed properties, stocks and bonds, and household items owned by himself and his wife, and this runs into several billions of naira. Some of Makinde's declaration, which of course are published in some of today's newspapers, are, just follow this through, I say follow the money. According to the papers obtained from the Code of Conduct Bureau, the cash at hand and in the bank declared by the new Oyo State Governor as at May 28th this year amounted to 234.7 million naira. In foreign currency, the new governor declared $30,000, a little bit above that. Properties and household items were also declared in the sum of $4.4 million US. Other buildings and household items were also declared in the sum of 4.4 billion South African rand. In terms of his shareholding in companies, the new Oyo State Governor declared 48.15 billion naira in value. According to the published report, a Eurobond owned by the new Oyo State Governor, Makinde, also amounted to $3.793 million US, while other securities, which include stocks and whatever, amounted to 120.5 million naira in value. So, how many buildings did he declare? He said he had 9 buildings in Nigeria, 2 in the United States, and 1 in South Africa. And this is sometimes the price that folks pay for investing in what you call Ponzi schemes. Now, the one who gets to clean up the mess is none other than the Securities and Exchange Commission, which says it has started the verification of claims by 4,160 Nigerians who invested in the illegal investment scheme based in Kano State, organized by a firm by the name Dantata Success and Profitable Company. The SEC sealed off the premises of this illegal or unregistered market operator last February when the agency discovered that his company is using illegal strategies to solicit funds from the public, selling them investment packages that runs into thousands of naira. Now, the SEC says it's verifying the claims of these investors. So if you're in Kano or you're involved in that Ponzi scheme, the SEC says you can step up with relevant documents from July the 15th, which was yesterday, Monday, and that verification exercise ends on the 20th. 9 a.m. to 4 p.m. every day, step up if you have invested in the illegal Ponzi scheme, investment scheme called Dantata Success and Profitable Company, one of the latest Ponzi schemes on the street. So the central bank is chasing around the banks, or chasing the banks around the room, getting them to increase their lending to the real sector. So what is in this new drive by the financial regulators. Is there anything in it for the securities market? That's the question I want to put to Johnson Chukwu, who is the CEO at Cowrie Asset Management. Johnson Chukwu, good morning and welcome to the show.
Good morning, Boston.
Thank you. It's good to have you on the program. So I'm sure you're not in the banking industry, but when the central bank set out rules for banks, those of you who are on the securities market or Market Street also pay a very close attention. Are you paying attention to this?
Sure. I am. And every other person who's interested in the economy must also be paying attention to the policy of the central bank as it relates to create extension and create expansion.
So how do you think this new drive for increased credit will impact the securities market, if in any way it will?
Well, because money is fungible. When the vaults of the banks are open for lending and economic activity improve, then you're going to see a lot of demand for the goods and services produced by quoted companies. And that will lead to an increase in the revenue of these quoted companies. And certainly, investors who are buying shares are buying into the future cash flow stream of the quoted companies. So if they protect that the revenues and the profitability of the quoted companies will improve, you will see a lot more interest in buying shares of quoted companies. That's one aspect. The other aspect is that this extension has the benefit of injecting liquidity into the hands of investors. Because once credit is expanded, personal wealth will improve, and those whose personal wealth has improved will want to invest in some growth assets, and equities are normally the fastest growth assets in any economy. So you're going to see situations whereby the improvement in liquidity or credit availability in the economy will lead to more people having liquidity to invest in equities. So on two sides, you're going to see the benefits of the credit extension impacting positively on equity prices.
Nearly all the banks that are going to be involved, the commercial banks, are listed on the stock exchange, on the stock market, with the exception of a few ones that are recently listed, and of course Polaris Bank, which was formerly Skybank and taken out of the market. So you have majority of the commercial banks that will be involved here with their shares. So do you see this as a way impacting their balance sheet, perhaps in the short to medium or long term?
Yeah, certainly. The drive by central bank will actually lead to the growth in the risk asset position of the bank. But on the flip side, it could also lead to an increase in non-performing loans, because the available good credits, high quality credits, are not as many as one would ordinarily have preferred. So you will see situations, you may see situations whereby the banks will extend credit to what they call subprime customers, subprime credit customers. That could lead to an increase in the number of loans of the bank. But on the positive side, you should see an increase in the balance sheet size of the bank, particularly on the asset side, as it relates to the loan portfolio of the bank. And an increase in loan portfolio of the bank should ordinarily lead to an improvement in their earnings. But for the risk, and I believe the banks have already dimensioned those risks. So I believe the good banks would also have put in place the appropriate risk management framework, to mitigate the likelihood of increase in number of loans as a result of the credit expansion they were going to back on. So certainly you're going to see growth in revenue, growth in assets, and possibly growth in weak credit or number of loans.
Johnson Chukwu, thank you so much. Let's leave it there for today. It's early morning hours, so you're at an executive level, you need all your morning hours to get down to business. Thank you very much. And of course, into the trading day, the CEO at Cowrie Asset Management. Okay, let's move on.